Hello traders, welcome to the LFB and our global video charting review for Wednesday, the 27th of April 2011. My name's Mark O'Haig from the LFB Trade Desk. Hope I find you well. We do have to point out that Forex and futures trading does involve substantial risk and is not suitable for everybody, and we would ask that you read and accept the disclaimers posted to the website before taking data and information from the video. This review will cover the nuances of the foreign exchange market, with the secondary video covering the fundamental nuances of the global futures market, including oil, gold, silver, and the S&P moves as well. This is more of a technical review of the currencies. The secondary video that will be posted today will review the fundamentals of the global market movement. Looking at euro dollar 1 hour chart, we've got blue candles which indicate to us that momentum is in a bullish pattern. Blue is bullish, white would be bearish in regard to momentum. Sentiment is long. We've got a trend line that's pointing up towards 2 o'clock. So this is a buy the dip kind of setup on euro dollar. Wouldn't be looking to buy the breakouts, because the initial breakouts on euro on any given day are heavily retraced, but would look to be buying the dip so long as these candles do stay blue. It has been pointed out that the strength in euro dollar at this point in time is more to do with the movement in oil and precious metals than it is to do with the economic outlook in the Eurozone. The last 6 months of quantitative easing implementation has led to a distinct breakdown in global market correlations, inverse and the correlations that have been in place for the last probably 10 years, as electronic trading really got into a consistent pattern of allowing risk to be analyzed and showed the converse movement in the dollar. But we've also then got a call from some quarters that the euro's got to collapse, the banking system is poor, the outlook for debt and the peripheral problems on spreads are too wide to be able to close. But that is missing a basic fundamental value in euro, is that it's bought as a hedge against the manipulation in the US dollar valuations. Having said that, so long as the euro continues the pattern of what was previously German Deutschmark trades, when we go back before 2000, the charts you see on euro are the German Deutschmark, and not then following the Greek drachma previous patterns. As long as we stay stabilized on euro and it has the nuances of the German mark movement, which hedged US dollar valuations, then the peripheral economic outlook issues in Europe will be dominated by the fact the global market is using the euro to hedge dollar trade. We saw some big moves on the Great British Pound during the course of overnight trade, which took cable from a test of 64 support, pushed it up to 65.80 resistance, and that was in reaction to the GDP numbers that came out of the UK, which were as expected. So not too sure why the market would react as strongly as it has done with cable, but as we can see now, we're in a sideways chop on the Great British Pound. We are bullish. We do still have on the 1 hour chart long momentum reads, but the trend now is starting to flatten out and price action is not able to break near-term ranges. The Australian dollar continues its bullish moves with a test up towards the 108.20 price point overnight. What we've got on the Australian dollar are one or two 1 hour chart moves each day, which seem to contain most of the daily price action. It seems to be 1 hour chart break, consolidate, 1 hour chart break. However, it doesn't look at all as though the global market is prepared to liquidate the long side of Aussie dollar trade. And the reason is you're getting paid decent swap interest to hold the Australian dollar against the US. And therefore, until there is a fundamental swing change in the economic outlook for Australia, which looks to be a long way off, then this pair will continue to be bought at support and to have these 1 hour crash breaks that move it higher. Looking at the Canadian dollar, we've got a pair, looking at the Canadian dollar, I've got a pair that's got a much heavier consolidation pattern than that seen on the Australian. The links between Canada and the US are very strong economically, and we're in a moment of trade that really has heavy consolidation. Not an awful lot going on, flat trend. We've got short momentum, candles are white, but overall price action is very weak. Going back to that dollar Swiss chart, we are seeing some US dollar buying going into the Wall Street session, but really nothing more than a retracement of the Asian session moves on the Swiss franc that saw the Asian markets really heavily buy the Swiss franc at the open of that Asian session. This is an interest rate linked pair, so we will look for further depreciation in the dollar against the Swiss franc, because this one now has definitely been put in place as the global flight to safety currency pair trade. Dollar yen has suffered some strange price action movement as the global markets have realigned after the tragedy of the earthquake in March, and there has been appreciation in the US dollar today because of the S&P 500 threat to downgrade the AA rating on Japanese bond values. So we saw a knee-jerk reaction that had the Japanese yen sold and the US dollar bought. We are running into daily chart simple moving average resistance, which is the 50-day at 82.50 and the 100-day at 82.70. So very much aware that we are in a short trend. We have just turned bullish in near-term momentum, but this may be a sell the test of resistance play that unfolds during the course of this week. We will update with signals and alerts as the currency pairs unfold their story this week. We do look forward to sharing with you the fundamentals of what's to come, and the video that's posted that covers gold and silver, and the fundamental outlook also covers the potential in the inaugural FOMC press conference that will be held after the rate decision on Wednesday.